is going okay. Okay. Looks like volume's down again on my mic. All right, let me know if we're good on the mic as you guys come on. I'm going to jump right into the screen here in a little bit. So no trading for me on the rest of the day. I've already traded this morning in both my Forex account as well as another account. And hopefully you guys can't hear the dog barking nonstop outside. So I want to go over a couple things here as we get started. Is it still super quiet? Let me mute. Let me mute. All right, let's do a quick test. Let me know how that one sounds, if it's any louder. Is it good? Okay. I just want to make sure. I just maxed up the volume on this as much as I can on this mic and shut everything else off. All right, so I'm going to go straight to charting. I know you guys really don't want to look at me. And I want to go over a couple things today. I'm done trading, so I'm not trading anymore today. So let's go over to charting. So someone asked earlier on gold, and I wanted to kind of go over gold. I missed the move today. I was in a meeting with an investor, and unfortunately, the only time he could meet me was today. He's a doctor. So that took me out of the game this morning. However, I did trade on the Canadian dollar before news on the Canadian dollar, which come out this morning at 8:30. So the Forex market moves a lot better than the futures market. So I'm used to trading currency pairs, so I looked for an entry before the news came out at 8:30 a.m. Eastern, and got into a trade, and then the news brought in, of course, the volume and momentum that I needed to, because when volume steps in, then we get that volatility, we get that momentum that we need to make profit. Without the news, you can still trade, because there's day trading going on, there's hedge fund managers trading, there's corporations trading, big banks trading, countries are trading. So you'll still get moves, and that's what we need. We need big volume to step in. Without big volume stepping in, we don't get momentum. We just have to have that volume step in. So you want to see big volume step in. So you really want to welcome news releases, because that's when that big volume steps in. However, that does create some volatility, right? So we want the big volume to step in during news releases, and we want that to help create that momentum that we can profit off of. We can just scrape some out of. We just take a little piece of that. We're not looking to get the tops and bottoms. If you look to try and get the top and bottom of the moves, you will get destroyed. And I'll go over some of that on gold here. You have to wait on that structure to build. You can't just try and say, okay, well, this is the top of the move, this is the bottom of the move. So I'm glad this happened today, and I'm glad I'm not trading, because one, I already got my money on the Canadian dollar. It went up, and it was up 10K this morning. I'm no fool. I need to profit, need to lock in money. So I had 40 contracts, or 40 lots is what they call them in Forex. So it's comparable to contracts. So I had 40 on, and when it got up to 10K, I closed out 30 of them. I closed out 3/4 on those big trades. So it got up to 10K, closed out 3/4, and left 10 contracts on. I'm getting it kind of confused with my platinum trade. So I had a platinum trade also that was up. The platinum trade was up 10K, and that one I closed out 8 contracts, locking in 8K, and it still has 2 contracts on right now. And you can see that on the bottom of the screen. So right now, the stops where I want it on platinum, I'm going to put it aside. I don't want to stare at it the rest of the day. So since I want to kind of set and forget platinum, right, because I got in platinum on the pullback, and then was up that 10K. So again, close out 8 contracts of the 10, leave 2 running, 2 as my runners. So I'm pretty much done with it. I don't want to stare at the rest of the day. I want to leave it on and let it go and see what happens over the next couple days. So that being said, I could take platinum and we'll just cover it up with something, something else. I really don't care. We just want to cover that up. So gold, though, someone asked on gold, how could you have got in before the drop? I didn't get in. Okay. So as we look at gold before, let's see, this broke out at, what was that? 9:30. So right around stock market open, really. So the signal came to sell at 9:24. So I'm on a 1 minute. Let me go to the 3. The signal's still there at the same time, but typically we're watching it on a 3. So either 3, 1, whatever you're watching, we're looking to get in, get part of that move. So it actually gave a sell signal on the pullback. That could be your entry. The thing you would look at, I know we had a couple buys in here. One, the sell signal came because everything's lined up on the indicator. You either sell off that or wait for a pullback. It had already pulled back. So I'm going to drop to a 1. But really what I'm looking at is this area in here. It's flat, and it was flat over here as well. So it created kind of a plateau on both ends. And if you draw a line there, let me take this one off. This was a previous low that I had low to break from yesterday. So again, we have a plateau or flat area here. We also had one here. So you come over and you mark the high. Okay, so that's going to be our high for over here, but it's also going to be, I'm looking at your comments in there. Yeah, so that's your high to mark. And basically that was the lows in here. So that's that support and resistance level that you're marking. You're marking the highs over here. So you have a resistance level. So it came up and hit, made a resistance, and pulled back. So it made that high. You mark it. And that's your high to break. That's the high you want to see broken in order to know that it's still continuing in a bullish move. We're still in bullish momentum, bullish structure. It forms a lower high or a higher low, and then comes up and taps that high. Doesn't do anything. Comes back down, taps it again, comes back down, finally breaks it. But this candle even closed right there, and that's a 3-minute candle. So several times. So that level was holding as resistance until it was broke. Once it's broken, we like to see it hold up as support. And it did swing down. This level did support this move down. It supported this move down, supported this move. So 3 times. It nailed it. 3 times over here. Nailed it. And what did it do? Go through. 3 times over here. What did it do? Nailed it. And then went through on the 4th. Same identical setup. 3 times hitting that level. 4th time broke through. 3 times hitting it as support. Broke through. Now, I've noticed I've got a zone up there. What color is my zone? Anybody want to tell me what color a zone is? So my zones, right, we mark on the 4-hour time frame. If they're red, yellow, and green, they're off my 4-hour time frame. The green ones are lows that we expect not to be broken. They may not. The red ones are the highs. So anytime, like gold or Bitcoin, Nasdaq, anytime we're making those all-time highs, we keep making a higher red zone. We don't expect it to go through those high zones. They do, but don't expect it. We look for, if it hits those levels, to possibly turn. So this is one of those I said, you cannot pick the top and the bottom because it will destroy you. And I know I've mentioned this a ton. You're in short. You get in short with, say, I'll just use 10 contracts as an example. You put on 10, you close 8 at partial, move your stop to break even, leave 2 runners on. So you'd put on 10 contracts. It moves down. You close out 8. Move your stop to break even or halfway to break even. Whatever your trade management, whatever rules you've set for yourself, that's what you do. It continues to go short. You'll move your stop along with it, but you leave your runners on. Just because it gets to a zone or, a 4-hour zone here or supply and demand zone, support and resistance level, just because it gets to that does not mean it's going to bounce. Okay? You're going to look for a bounce, but until market structure changes on the trade, you stay in and hold your runners. You don't, this right here candle that comes down and wicks toward that zone, you don't close out your runners. You don't panic. You don't close out your runners and say, oh, it hit that zone. I'm expecting it to turn. We don't expect anything. You shouldn't expect anything. It's a possibility, but it's a possibility that you haven't seen yet. You have to wait on some sort of structure to build on the other side. Right now, you've just got bearish candles, long bearish candles. Okay? This candle right here, even though it looks like a long wick down, which it is, during that 3-minute time frame, who had control of the market? The sellers did. The sellers pushed it down, but then the buyers kind of retaliated. They pushed it back up. Okay? If you go down to a 1-minute time frame, you can look and see that over that 3-minute span, what actually happened during the 3 minutes. Okay? And we still continued with red candles printing. Okay? Doji candle, really indecision on this candle, high indecision. As the low wick on this green candle, the low wick pretty much is identical in distance to the high wick. I mean, you can just see that. You don't have to measure it. So indecision in the market. The bearish side of the market is still pushing down. The bullish side of the market actually had control for a while, pushing it up. But then ultimately it closed out as a doji. So, but still, bearish move. So what looked like it might be bouncing here, because you get the green candle finally, you get some long wicks, you're going, wow, it's turning. I'm out. Some people closed their trade there on that candle and might have even got in long. But look how far it kept pushing. So unfortunately, this right here is hard to decide when to get out. You have to create your rules ahead of time and decide what are you going to use. Let me take the magnet off there. How are you going to manage your trade along the way? Okay. So are you going to, move a stop down? I wish there was a way just to get that to pop up like that. So as you get in the trade, you take it short with 10, your stop's up here. It moves down aggressive. How are you managing your stop? Are you looking for highs and lows to move it off of? Most people are. You're looking at swing high and lows. So in this case, you'd be looking for pullbacks. And then you would move your stop down as it pulls back. Well, we don't really get that. We get long red candles. So this would be an aggressive stop management, is to keep it 1 or 2 candles back. You would have to decide. Nobody can decide this for you, okay? Nobody can say, this is, and there's nothing set in stone, guys. You could sit there on this trade and say, well, I'd keep my stop 2 candles back. Or, because ultimately I'm looking for swings. Ultimately it pushes down. I'd like to see it pull back and then a further push down past the low it created, say here. I'd be looking for, so we move down. And then if it pulls back, then I'd be looking for a break. And right when it would break this low, then I would move my stop. That's traditionally what we look for in our trading. We're placing our stops off those previous highs and lows because they tend to hold up. The next move after that, after it pushes past here, then it would go back to either test this level or it might come clear back to test this level. We don't want to see it test there. We'd rather see it come back and turn and then go break. We'd rather see it come back and turn here, which is the inside of this move. So when you have a swing up and down, the inside of that move. So whatever candle this is up here, you're looking at the bottom of that candle or wick. That's the inside top. We want to see it. If it pulls all the way back, we want to see it turn at that inside top. We don't want to see it go back here and test this high. We'd rather the bearish side of the market stay in control, okay? So as it's pulling back and the bullish side of the market gains control back on this swing, we want the bearish side of the market to take back over and not let it go back to this high. That's what we look for. And then you get a break of what? We get a break of this level, and then now we've created that high, right? And then we'd move our stop off that level. Never to the tick. Always give it some room. So that's traditionally what you look for. Well, we didn't get that today. We didn't get any of that. So that's what we look to do with our stops. That's our original plan. Let me get some of this stuff. I guess I could have just hit the delete button. So that's the plan we look for. Well, on today, with these big, strong moves, we're here to make money. We're here on a daily, and I know you're looking, going, man, we should be in long. So I'm not looking to take it, but that's the structure we're looking for over here to say it's turning. So we move our stop on the way down. And again, you have to decide where you want to move, how you want to adjust. So on this move here, so when you get in the trade, your stop may be up here, okay? And you get down here. As you look at where the stop is, look at where the price is, that's about a 2-to-1. If you got in here, it's at least a 2-to-1. Okay, so you could close out partial. Yeah, these are live, but they'll be Candace, they'll be out there on YouTube. So the lives are always recorded. Just so you know, out on YouTube. So as it hits this candle, you have to decide. Are you waiting on swings? Well, this is a pretty aggressive move down. So on an aggressive move down, you could move your stop candles and decide 2 candles back, let's say. So you'd go, as it hits here, you'd take the top of this candle, and you could say, well, I'm going to move it here, okay? Next candle it moves. Now, this is aggressive. Next candle moves. It closes here. Where are you going to move your stop? You're going to move your stop above this candle. Okay? Yeah, this will be good. And then next candle closes there. Where do we move our stop? Above this candle. So as each candle closes, we move our stop down, if we can, to the next candle. It's an aggressive move, but it's about the only way to lock in profits as it's screaming, as it's just dropped through the floor. Okay, so now price is here on this candle, and we have our stop 2 back. This candle wicked down to here, so it went past the low. We're always looking for a candle to break a low. In this kind of a situation, you need the other candle. You want the other candle to close below the low. This one actually closed barely. It pretty much opened and closed a little bit below. So you could move your stop down here. And that's what you're going to do the whole way down. So then we have a candle print here, close. You move it down to this stop. Now you can see we're getting tighter. It's getting a little bit tighter as it goes down because price is here and our stop, we're moving off that wick. Next candle closes below. What do? Move our stop above this candle. So you could say I'm staying above the previous candle. Once a candle closes, I'm moving it above the previous candle. Okay? Let me take this one off. So basically, now we've stepped into the green zone. Okay? Still moving our stop one back. And we barely moved it there. So on this one, you have to decide, do you want to even move it at all? You know, because here we have this candle close, and that's current price. And then we would pull our stop above this high. So you have to decide, do you really want to even move it at that point? You're moving it for pennies, you know, or small dollar tip money, we call it. But here's what you don't do. Just because, and I've mentioned this before, just because something is pulled down to your zone, okay, doesn't mean the move's over. So right here, it wicked down there, okay? So just because it's hit a 4-hour zone does not mean it's done, okay? What that means is you might want to tighten up your stop. You might want to close some of your runners that you have on because it may turn. Don't assume it's going to turn. Because if you assumed this was going to turn and you closed your short and got in long, would you not have been disappointed in this move here? Because if you closed your short because it tapped a zone and got in long with your stop down in the zone, what's going to happen? You got stopped out. And then over here, you might even say same thing. Oh, look at that. That green candle, it's trying to pull up. I'm going to buy again. I'm going to try it again. And you buy and get stopped out. Okay? And then we have a 4-hour line here. And you say, oh, it's tapped the 4-hour line. I'm going to buy again. 1, 2, you just took 3 losses. And you closed your short. So you can't try and predict. I know people that do this all the time. It's hard not to, guys. It really is. It's just the way our minds work. We see something drop to a supply-demand zone, a 4-hour support and resistance zone, a trend line. We see it pull to those levels, and we think, oh, it's going to turn. Yeah, it probably is. But when? It doesn't mean it's going to turn right then. You have to watch the market structure. You have to watch the price action. I had someone the other day mention to me, well, what about price action? I'm like, we watch price action every day. I just don't call it price action. I mean, we watch these moves. This is the action of the price. It's bullish structure over here. Okay? So we're watching it every day. We just may not call it that. And they've changed the terms so many times over the years. So they pretty much are interchangeable, a lot of the terms, like supply and demand, support and resistance. So basically, though, you're holding those runners. You hold the runners until structure changes. Okay? You don't assume this is it. All right? Because, again, you would have taken 3 losses there. So, again, it moves to this green candle. So the green candle closes. Are we going to move it down? If yes, then you're going to move it down, you know, above that previous candle. Next candle prints, closes. Where are you moving your stop? I'm not moving it at all. It's just really not enough. I mean, you could squeak it down here, keep it above that high right here if you want. But now we get another push, another candle close, and we're going to move our stop because that's what we said we're going to do. We're going to trail it by moving it one down. I'm trying to read your guys's. Yeah, we're going to look at that on here in a second when we get there. And a lot of times you're giving back money on the buildup of structure on the other side. So I'm going to show 2 different options here as far as how to help look for that entry. I don't even know what one of them looks like that I'm going to show you. It's a tool that's out there. You can get it. And it helps with trailing stops. My son uses it. It's something I originally got him started with. Was I wanted him to be able to have a tool that helped him trail his stops on the way. So I'll show that one. I don't even know if it's set up right on the chart because you have to set it up differently on different instruments. But back to this real quick. So we have another candle close. What do? We move our stop above the previous candle. Another candle closes. What do? Move our stop above. I think you can see where we're going, right? You can see what's going to happen. This candle closes. Where do? Move our stop above here. And then we get stopped out. 2 candles. So that was a good run. You captured a lot of profit on your runners. You may have not kept them all on. I just go in it as an example of, placing 10 here. So, you put 10 contracts in. So you sold 10, and then it gets down, and right in here, it got to a 2-to-1. It's always good to close out partials. So you closed off 8. All right. Locking in your daily money on that trade. If you're only looking for 100 or 2 a day, you've locked it in here. Okay. I'm not going to measure it, but it should have been about 100, 130 in here. So you would have closed out 8 and locked in, that trade goal. I'm looking for 100 or 200. Guys, $200 a day is $4,000 a day. So I've got accounts, smaller ones, I look for, 500 a day. And then I've got a larger account where I look for 5,000 a day. But I'm trading with more contracts in that one because it's a bigger account. It's grown to be a bigger account. So you close off 8. Now, as it drops, you have to decide, are you going to close one more? Do you leave both runners? And you could look at this move and say, well, yeah, I'd leave both on. Okay. So it starts moving. You close out 8. It starts moving. Indecision candle pretty much here, long wicks. And do you close one out there or not? It's easy to look back today and say, nope, I wouldn't have done that. I'd have left my stop, trailed my stop down. I'd have got all that. Well, would you? Would you really have gotten all of it? Okay? Because it's easy to look now and go through and say, yep, I'd have trailed my stop just like that. I like that. I'm going to start using that. I'd trail my stop, and I'd leave them both on. There's going to be days where it goes down like that, and then it comes all the way back, okay? And then you're going to say, well, I wish I would have closed out one down here, instead of both being closed out for me as I trail the stop. So, again, that's a personal preference. I can always help you guys figure that out for yourself, but it's really for you to try and figure out what you like. So over here then at the bottom, and I'm calling that the bottom because what happens? It comes up and breaks our, closes our trade, comes down and makes a higher low. Over here we had nothing but bearish moves. We had some wicks to break, okay? We had like this wick right here. Every time it pushes down, you have a candle to break. So as it hits each candle, these aggressive moves, well, that's your low. It needs broke. Well, it broke and closed below it. Okay, well, then that's your low to break now. Because it's opened, it probably pushed up right away. So as that candle's green, this would be your low to break. It pushes down and creates this candle, closes, opens. What happens? It pushes up. So the bullish side of the market is continually trying to bring that back up. And the bearish side of the market goes. It closes just past a little bit, but that's still your low that needs broken. This wick down, when it wicked down, that's your low to break. You're always having the new lows that need broke. This candle doesn't break it. This candle doesn't break it. It wicks past it. This candle opens and closes below it. It's broken. So when this candle opens below and closes below this line, this low, well, that's a new low to break. Go down to the wick and you mark it. Those are the levels that we need broke. This is a constant thing you should be doing, is adding these horizontal ray lines. I use them all the time. You'll see my charts like flooded with them. I had one up here earlier. It was from yesterday. And then that low to break from yesterday. So you're continually moving down and down. Let me know if that dog's too loud. And continually moving. Well, this candle here does not break the low. It broke it with a wick, but it stayed up here. So during the 3-minute time frame, it pushed down, pulled back, closed up. Now we've got possible issue. We had it over here too, where it closed above. So then we see it pull up, green candle pulls up, and this candle wicks down to that low. And then we see another bearish candle or bullish candle. We see a bullish engulfing candle here, and it breaks the stop level, which was at a previous high, which is here. So you should always be marking the lows and highs. So when it came down and swung down and it pulls back up, we have our low marked here, okay? Really nothing here. This candle doesn't break. We would have our previous high marked, and that's kind of broke there. So it wicked past, but then closed down below it. This candle here opened up, wicked down, not breaking the low, not breaking the high. We're doing nothing. We're still doing nothing. We're out of our short trade. We're absolutely sitting on our hands. This candle here comes up, closes right at that line, not doing anything. And then this candle right here, this green one, breaks that high. I mean, it opens and closes above. Nice bullish move. At that point, we're waiting on a pullback. We're not going to get a signal with how these are set up, how I reset them back up today. So we've got the 5, 15, and 60. I'm going to switch this over to 15. We're going to ignore the one of the lines. And see how that gives us a buy back in here if we ignore that. So you can set this up multiple ways. The way it's originally set up is 15, 60, and a 4-hour. But if you're day trading, if you're scalping, if you're looking for shorter moves, you're going to need to change these. And it's okay to do that. You're just adapting them. I change these to 5:15 if I'm scalping, and I'm typically down on the 1 minute time frame then for an entry. Okay. So it comes up, closes above, again, the high, previous high. So now we have that, here's a low, pulls up, pulls back down, creates, and then pulls up. Because once it breaks a high, we can say this is a low. All right, so again, has a low here, goes up, makes a high. Oh, I got the head and shoulders. We don't want that. Grab the wrong tool. Sorry, guys. So we have a low, goes up to make a high, comes back. At the time this candle prints right there, we don't know if that's going to be as low as it goes. So we're letting the market show us. Show us when to get in, give us the best opportunity. We need to see the structure build up in the opposite direction. This isn't enough structure. We have a low, we have a high, but what's it going to do after that? Because what if it just is testing this zone? What if it goes back and does this? Okay, that could still happen. At the point it goes up, comes back, red candle here, and even the green candle there, that is not the time to get in, because at that point, it could still turn and go short. Okay, so we need a higher high and higher low, and then another higher high. So we have a low, and you could be down on the 1 minute to see these. We have a high. We have a red candle that wicks here. We can't technically call that a low until the high's broken. Okay? Because it might go lower. It could have pulled up like right here and then went down. So until the high here is broken, we don't call it a low. Once that high is broken, well, guess what? That's our higher low. And now we have a higher high. Because as soon as this green candle here starts wicking up past this high, it's printing a higher high. It can't take it back. It's already in the move. So we say, okay, now that's structure. We have a low, high, higher low, higher high. We're going to wait for a pullback to get in. So there's two ways to get in on these that I like to get in. So I like waiting on the pullback. Waiting on a pullback for our bounce. Wait for a green bullish candle. And then we're going to get in. You can also put a pending order on. I don't suggest doing full contracts when you're doing the pending order. Okay. So the pending order is more of a safety order so you don't miss the trade. That's completely what it is. I don't want to miss out. This candle prints, we make a higher high. We're making a higher high in this one. And we say, okay, I don't want to miss it if it just does this. Could it do that at this point? 100%. 100%, it could just scream and take back everything it gave here on that short move. The bullish side of the market take over. And not only that, guys, I know a lot of people just say the bulls and bears. Okay, yes, there's the bulls and bears. There's that competition. There's that prices they're looking to buy and sell. But there's also profit, okay? I love selling over here. I'd love to have been in on this sell-off. Well, at some point, I'm closing my trade. I'm taking profit. That everybody taking profit, especially the hedge funds, the big banks, the countries, they're taking profit on a larger scale. What does that do? It moves the market back up. So they're not bullish on the market on the day necessarily. They're bearish on the day. However, they're closing out. They're taking profit at end of day or midday. So that helps this move. So it's a combination of all. But I know you guys have seen times where it sits there, comes down the bottom, gives a little turn, and boom, it just blasts through the roof. So it could do that. So what you could do is put on a backup trade. So if you normally use, say, 10 lots on a good entry or contracts, go with less contracts. That's your safety trade, okay? Your backup trade. That's what I call it, is a safety trade. So that's your entry in case it just decides to go and you want to make some money on the day, okay? If it just decides to go, go, go. You want to make money. Now, there's an issue with this, is the next candle could come take you in, and then it could give a pullback, and then go. So in that scenario, you're in the negative for a while. So if you put the backup trade on like this, you have to be okay with it going in the negative and possibly stopping you out. So what should that tell you? You're going to go in with less contracts. You might not even do 4. You might come in and just do 2 or 1. Just put 1 contract on in case it goes without you. And then when it pulls back, because in this case, it never triggers. But if it did trigger you like this, you'd be in the negative for a while, but only on 1 contract. And then when it pulls back and gives you this bounce, you could stack in. Okay, you're allowed, and if you're trading prop firm, most prop firms I've checked with, you're allowed adding in once, because that would be considered a negative position because it would trigger your single trade, and then it's going to pull, and you're going to be in the negative on that. So as far as I know, most brokers, and they're watching this, you could only stack in 1 time to a negative trade, and that would be it. You're getting in here. If it goes deeper than that, you're not stacking back in. We're not, buying here, and as it comes down, you're buying again, buying again, buying again, buying again, buying again. You're not doing that. You're going to get your account closed, and you're going to get banned, okay? So you're allowed stacking in 1 time. So this is the scenario that you would want to do. Put on the safety trade. If it goes and triggers, it could just go, and you're glad you're in it, okay? Or it could do this. It could pull back, and then you were glad you were in it in case it screamed without you. However, it pulled back. You're in the negative now, but you're in the negative on 1 contract, not 10, because you didn't go in full contracts, because that's not the time to do it. That's a riskier entry, okay? So less contracts. Stack in. Throw the, another 6 on, or you could throw the 9 and get you to 10. If you consider this to be a good bounce, I consider this to be a great bounce. It pulled down. Let me get these arrows off here. So that would be our backup. And then it pulls down and it turns right there. I mean, it just turned right there at this high. So a perfect turn, bullish candle, the green one. Now, that's traditionally what I would look for on an entry, is that candle right there. It's a pullback, green candle entry. You don't enter on a red candle. If you're going long, I would have a retracement line that I would have drawn like that. Okay, that would be a retracement line down. So retracement line down, and then it breaks that retracement line, green candle, boom, you're in. Okay, that would be a good entry. It still has to break this high. There's always going to be a high that's close that has to be broken. So the signals just happen to come after it here when it broke this high and everything lined back up on the indicator. So right now on that entry, I'd be sitting flat. It was kind of like yesterday. I was in a trade, and after I got in, it was positive, negative, positive, negative, positive, negative, positive, negative. So you have to look at time of day. What time of day is it? Well, right now, for me, if I would have taken this signal long right here, it come at 10:45. For me, I don't like taking trades between 11 to noon is about when I like to quit. And if I take a trade, I want to be in and out. I'm looking for profit quickly. I'm not looking to sit in all day long and then end up losing overall. You know, if I gain profit on this move down, if I was in gold and gained profit on that, coming back, I'd get in. And unfortunately, you're going to miss part of the move, waiting on structure to build. But it's a safer entry. I don't try and predict the top and the bottoms. If I did, if I tried to predict top and bottoms, would I not have bought there when it hit my zone or price level? You know, your supply and demand, support and resistance level. I would have bought there, saying, okay, it's hit the bottom. All right? And you say, well, yeah, when it wicked down, if you bought right then and there and closed your other, you'd have made money. Yeah, it went up for like a minute. So you'd better been prepared to close out some, because if not, you took a negative trade. So again, not trying to predict that, you know, this candle here is green, not that one, this one, and say, well, that's my candle I'm entering. Another negative trade. So in order to not, because you would have had multiple, then it comes down here and taps your bottom of your zone or your 4 hour, and you're taking another buy, and then you get stopped out. So I can almost guarantee that anyone in here trying to predict the bottom of this move got stopped out on 3 trades. I don't want that. I don't want stopped out on 3 trades where I put, and you better not be putting full contracts on them, okay? So you just took 3 trades with full 10 contracts each. That's a heavy day and a loss. Probably took back everything you gained in here. Right here. Within these several candles. What do we got? Let's say you took the first one there. There's 10 candles there. That's a half an hour. So a half hour move down, or less than a half hour move down. You gained a lot. You tried to predict that that was the bottom. It wasn't. So you said, okay, that wasn't it. And you got stopped out here. So you said, okay, this is it. I'm going to buy. And you buy 10 and boom, you get stopped out. And then you say, okay, surely it's going to turn up my 4 hour line. I'm going to buy now. And it goes through your stop. So you just took 3 losses in half an hour. But you had all these gains up here. Okay. So we don't want to give it all back. So another way to manage your account, and this goes as a whole, we don't just manage our trades. How many contracts are you going to get in? On a great setup or good signal with news to back it up. And what I mean by that is I'm going to get in before news comes out. News, the volume steps into news, the volume of traders, the volume of orders. And then that creates that momentum. Yes, it creates volatility, so you got to be careful, but it creates that momentum, and we need that. Without the volume stepping in, so without that news, And without the volume stepping in, you don't get moves like this. So we need it. It's just figuring out how to trade it. Part of that is how many contracts do you put on? If 10 is your usual for 100% setup or an A plus setup, then a riskier setup, you do less contracts. That's just how it should be, guys. You're managing your account, and you should be managing it like a business. Every bit of this should be a business. It should be methodical, thought out, 100% on paper, and you need to trade that way. You have to learn to trade without emotions and not get even. I can guarantee that people trading funded accounts that bought in here, that said it's turning, took a loss, they're mad. Because what they just gained in here, say they lost back half of it. 10 contract, boom, stop. Guess what they're going to do? They're mad now. This candle prints. I'm doing it. It's got to be the bottom. Boom, they do it. And sure enough, it pulls down. Boom, they do it. And they take the 3 losses. Now they're in the negative on the day. They were in the positive. Why throw it all back? Why throw it away? Because we're here to capture money on the day. So getting in on this, all this over here, wherever you got in, you put a pending order there, which got triggered. You know, you entered after this candle, you entered on this candle. However you got in on this trade long, how many contracts did you put in on this pullback or this break? Again, we put on 10 over here, made good money. How much do you need per day? I'm a big, firm believer in capturing the money you need on the day. There's no need to give it all back. Okay? So any entry over here, I'm not going to put 10. I don't want to put the same amount. I don't want to lose all that back on an entry that fails, that just doesn't. And I'm not saying, I guess I shouldn't say entry that fails. Entries are valid, but the movement after, there's just no movement. Why is there no movement right now? How many of you are saying like, why? Why do we have no movement right now? Well, look at what time of day it is. I mean, it's 11:30. Close enough. Got 2 minutes, it'll be 11:30. That's 11:30 a.m. Eastern. What happens at 11:30? Noon. Well, it's lunchtime in New York. So now you have hedge fund managers, senior traders of the big banks, the hedge funds, everything. The corporations, they're breaking for lunch. Now, I'm not saying there's no trading going on, but now there's less volume. The volume should be dropping. Look at the volume right now. Okay, that's current candle volume. We have low volume. Look at the volume back through here. Guys, you look at these candles, 900 volume, 903. Now we get 6. You look at this one, 1.8, 2.6, 324, heavy volume, 362, heavy volume through this move. Well, it's lunchtime in the U.S. So what else is happening right now? You know, noon, our time. Well, the London boys are shutting down. It's 8 o'clock, or 8 o'clock. Yeah, it's in the afternoon for them. Let me shut that off. That's an alarm. You know what that alarm was? It's telling me that it is 11:30. So, yes, I have an alarm set on my phone for 11:30 to stop looking for entries. So, right now, and I have this on my watch. I know, like, you can't see it too well. It's in there from my face. I have 2 times on my watch. My watch has 2 time frames there. It's London and U.S. So, right now, it's 11:30 over there. So, noon hits what? 4 o'clock. So, they're traders right now. They're senior traders. They're traders. So a lot of these hedge funds, they'll have a senior analysis or trader, and then they have other traders trading their money. So the senior floor manager or trader is in charge of the others. Okay, they answer to him, and then he answers to, you know, like the CEO of the corporation or hedge fund, whatever they're working, the big bank. So they're all wrapping it up for the day. Now there's bots. We have AI now. We're lucky enough to have AI and bots. that have been around for a while. So those are taking grip in the market, and hedge funds are using them. These fund managers are using them. They have people that watch the bot. So as the bots trade, they have people that they pay to sit there, and they know what the bots are supposed to do, and they watch them. And the bots are trading high volume. So yes, you will have volume step in here and there that is unaccounted for. You just don't know where it came from. There's no news. Trump hasn't said anything. There's nothing going on. No wars have broke out, no major purchases with any corporation that's global. And that could be a bot. So there's that, unfortunately, that we have to deal with as well. Those bots and AIs don't trade 24 hours. So the hedge funds, the big banks, they're not going to have their AI bot trading and walk away for the day. Because what if that bot messes up? And can you imagine blowing a account that has several $1 billion in it, or $100 million in it, or even $2 million in it? For us, no. That would be catastrophic. So when they leave, the bots are shut down. So what's going to happen? Our volume is going to drop even more. So we don't have volume at all now. So we're going to get that wishy-washy back and forth. So if I took the buy right here, for one, it's later in the morning. It happened at 10:48. So I'd have to decide right now with this flat volume, am I in or out? It's okay to close the trade. We had a high here, and it never got above it, okay? And then we would have the low of this candle, and then as our low. So it never broke the high, and now it's pulling back to low. So I would be in the negative right now. If I choose to close out, yeah, RH, I'll go out and get a video here in a little bit, because I have a video on that shows that indicator. But right now it's pulling down. So we're getting mixed. We had a buy signal here, had a buy signal here. That looked great. This buy signal looked great for continuation of this bullish move. However, it never broke the high back here. That one. I mean, it broke and closed, but no move above it. The next candle just popped back through. So again, time of day. It's not the best time of day. It wasn't the best time of day to take that entry. So that being said, if I look to stop taking new entries between 11 and noon, this is 10:48, almost 11. Am I going in with 10 lots? No, I am not. If I want to take a chance, I'll go in with 2 or 4. I'm not going in with 10. And then that being said, it's going flat in here. It's okay to bail on the trade at any moment. I could say, if I get in that at 10:48, I could say, okay, I'm going to let this trade go till 11:30. That's long. If you're day trading, you're in it almost 45 minutes. That's a long time for a day trade not to move and give you a place to close partial, is it not? So I would have closed out in here. It's okay to close out your trade and just say, nope, that entry came late. I took a chance. I put on 2 contracts or 4, but you didn't put in 10. 10 would be kind of foolish on that because of time of day and volume slowing down. And it's okay to close out in a loss. If you close out in here, even if you closed out now, because if you got in on that candle, let's say you picked the previous low for your stop, right in here, and I'm using that candle low, okay, the pull up down. Because if I went to a 1 minute, I would see this as a swing right here, those 2 candles. So that would be our stop. Here, let me put the stop marker there. So that would be my stop. So is it not better for me to close out right now? This is if I took the trade. Would it not be better for me to close out right now than let it hit my stop? What's better management? Now, can it bounce here and go long and go, clear? Sure. But am I going to be around for it? I mean, could it bounce here and hit this and hit this? But am I going to be sitting here this afternoon? I don't want to. I like to be done by noon. I really don't want to sit around and give back money in the afternoon. So if you're choosing not to trade, isn't it better to capture this and get that money on the way down than to get in late in the day? Now, I'm not saying you can't take trades in the afternoon. You can take trades. They may pan out. Just realize there's risk. Realize the market's flat. Realize the volume is low. Realize that half the trade force has left the building because you have the U.S. market open. And we're talking the big boys. I'm not talking about us out here, retail traders. I'm talking the big boys, the hedge fund managers, corporation. I'm talking the New York Stock Exchange. I'm talking the, CME group. We're talking about the bigger players in the market. In the U.S., they're going to lunch right now. Over London, they're leaving for the day. So you have the big players overseas are shutting down for the day. There went half the trade force. There went half the traders in the market. Why would I want to trade with half the volume, half the traders gone? That cuts our volume down. Why would I want to trade around lunchtime when more than likely everybody's going to lunch? And they shut their bots down during lunch. They're not going to leave them run while they go to lunch. They might take turns. I don't know all the ins and outs, guys. I just know that they're not going to leave for the day and leave one run. Now, they may take turns, and I might sit in a chair and manage it, and basically you're just supervising over the bot, over its trades, and it's trading one particular account. And then when whoever gets back to lunch, then they step in the seat and I leave for lunch. They might do something like that. I don't know. But that's what, as I look into the market and the players that move the market, and now the AI and the bots and how that all intertwines, you get a feel for what is probably going on behind the scenes, okay? Doesn't mean you have to know or see it to know that it's going on. So the other thing is trend lines. This is kind of hard to draw a trend line down. You could add a trend line across the tops, from like that point to that point, and that would have been your trade line down for the day, okay? And that would be the other thing, is we're looking for those lines to break. You would have also had one here so you draw a couple cross tops. It had a sell signal. It broke the low. The biggest thing for me on this is, yes, we see multiple sell signals, and you see a couple buys in here. So what does that tell you? We need to wait for a break. We need to wait for a break of that structure. So up in here, because before that, actually I got the time shut off to only turn on at 7, I think, 6:30. So I'd have to look at that and change that on this indicator. So, but we have sideways movement, right? It breaks the high. We have sideways movement. It can't break this high up here. And we're looking for a break of this structure. That's our current structure this morning. So we're ignoring the buy and sells. The buy and sells are telling us, hey, we possibly are, ready to go short, or we could continue long. What do I have to wait for? I have to wait for a break of this structure right here. This is our 3-minute structure. We have definite low, definite high, and we got the high from back here, the low from back here. This was our high that became our low. We got to wait on that structure to change, because until this structure changes, well, what could happen? What could have happened when it come down here? Well, it could have just stayed in this some more and then broke high. Broke low back here, broke high. Could have done that, right? So you have to look at the market and say, what am I seeing? We know what we want to see, right? The market doesn't care what we want to see. We have to look and say, what am I seeing right now? What is the market telling me right now? What can I interpret that it might do? So while it's sideways up in here, we do nothing. You could try and trade it as a channel, up and down, up and down, up and down. That's a lot. It's frustrating. You definitely don't do 10 contracts. You do like 2 contracts, and you just bang them out. Hits the bottom, you'd buy. Hits the top, you'd sell. Bam, 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 bam. Okay, that's range trading. You could do that till it breaks out if you want. It's nerve-wracking. You're going to take more losses. So what we're waiting for is the change in the structure. It actually came down here, closed below the lows, and then pulled back up to test that low, those lows, which was the highs again back here. So it 100%, pulled down and closed below that line, which is below the highs here, below the lows there. So on that one candle is telling me as it closes here, and again, these are 3 minute, pretty quick. 1 minute you can go down for news trading and momentum trading. 3 minute gives you a little bit of time. Every 3 minute you're waiting on a candle change. So as it closes below, you could put that pending order down here, that safety trade, and I would have looked to the left. So instead of putting an entry trade right here under that, really close. I wish there was a way to not have these like this. So instead of putting in a pending order there, right below that candle to get in, you would have been wicked in, sat in the negative for a while, but you risk getting in and being in the negative. It could have went even deeper. So look to the left of the chart and look and see these lows in here and go, I want my pending order below that. Drop your pending order below that, okay, somewhere below it. And you have to play around with how far, because you could get wicked in easily. And then wait for the pullback, because you don't want to get in right when this candle closes. You want to wait for a pullback to get you in on a better price, okay? So you could dial down on a 1 minute, and then you'll see the pullback a little better, okay? So see how it went down. So on the 3 minute, it looked like one candle closed down there, but these are the 1 minute time frames. So you'll see it went down and then pulled back up. Well, that's a better entry price on that pullback. If you wait for a red candle, you would sell there. That's your confirmation candle. After a pullback, a red candle's confirmation. You could take it short, or you could still leave the pending on. You can also build into your position. So there's multiple things you can do here. You could, on the pullback, well, you could say, I'm really not too sure still. It's pulled back. However, it's got this low here that we need to see broke. So it's okay to, I don't want to say hesitate, because you're down on a 1 minute right now. I don't want to hesitate, but it's okay to have your reservations and say, not so sure this is 100% set up because of this low here. So let's go in with 2 contracts and let's build into it. And as it drops, let the market pay for your entry on your other contracts. I don't know if anyone's played with that, but that's a good, safe way to build into your trade as it moves down. So you're getting in with low risk. You're getting in with 2 contract stops up here. And then as it goes down, you're building into your position. So, and then you could always still close out partial when it gets to this level. All right. So multiple entries. So again, the indicator gives us that, hey, we know it's sideways. Okay. Always watch the candles. Always watch the move of the candles. What are they telling you? We're sideways. Always watch them. Just because a buy and sell comes up doesn't mean we want to take it because of this right here. The consolidated sideways moves, you will get this. Always. I don't care what indicator you're using. It could be MACD, RSI, stochastic, moving averages. They all work. They all work to an extent. You have to figure out how they work with your trading, and then use that, build on that. They're not going to pick tops and bottoms. So get that out of your head. If you're thinking that there's an indicator out there that you can pick tops and bottoms, you can't. I've tried it. I've gone through them all. We just had someone that mentioned to me that a couple months ago that they've tried every indicator under the sun. Okay, they all work, but some work better than others, but some work better than others for other people. You could take 10,000 people that trade this indicator, 10,000 people that trade moving average, and they're not going to trade the same. It's not going to work the same for everybody. So again, the indicator is to give you the buy and sells that tell you, hey, here's a heads up. I might be heading in this direction. So if I see sideways movement, I'm not taking that sell, not that sell, not that buy, not that sell, not that sell, not that buy, not this sell. Oh, wait, this sell did break the structure. There's your entry. Or, and you get in light. If you're not confident in that because you're low, we have a low back here, the sideways movement back here, then what do? Go in lighter. Instead of 10, put on 2. And then when it breaks that low, finally here, put on 2 more. Okay? And then when it breaks that, so you can build into that, or that's all you may put in. Or when it breaks this low, you might put the other 6 on and have 8 on. Okay, that's something you have to decide on there. So ultimately, again, we're seeing it flat. Are you closing? If you got in on this, now if you got in on this one, I'm not going to measure it, but if you got in on this with your stop below the current low, below the 4-hour line, well then in here you probably would have closed partial. So if you got in on that green candle, you were in. If you waited on a signal candle, unfortunately, you're in the negative. You were in the positive, negative, positive, negative. Like I sat in yesterday, flat. So again, time of day, me personally, I'm done for the day on this. That's it. Just done for the day. And again, if you're watching trend lines, we had this one. You would have had one down through here. We'd have it on a 1 minute to try and draw the trend lines a little better off bounces. Because as I draw it there, we'd need to go to 1 to see where the, and let me pull this off. Because see how it's not on the candles. So we would have had it there, and you would have had it, say, like here, and extended, not there. I'm trying to pick the candle tops here. So something like that. And that gets broken. So this is another thing that I've gone over before. Trend lines are linear. It's just a straight line. So trend lines are linear. And unfortunately, the market doesn't move in a linear fashion. It's just not. It's not going to stay. And I could see where I did not pick this candle right here. That would be our high candle. See how it moves down sharply, hits that 4-hour, and it comes over and breaks this. That aggressive trend line, downtrend line comes back, taps the green side, gives a green candle. There's traders taking that. Boom, right there. That green candle. You have to wait on structure to build. If you want safer trades, if you want less losses, that to me, that's what I used to trade on. You know, we have 2 trade lines down, and we have the aggressive one. The one that gets broken, it gets tested. You know, it pulls back to test it after breaking it. I give a green candle. That's my signal candle. Boom, I'm in. Why? Well, look at what it did, moving this out. But look at what it did. It basically came back down, so it broke the trend line, came down to test the backside, testing that low as support. Support held up, green candle, boom, I'm in. I'm buying because I'm trading it back out here to the outer line. I'm trading a retracement. And I used to trade those all the time. I used to take those trades. And guess what? They were losses. Because I quickly realized that, hey, my trend lines are straight. The market doesn't move straight at all. You'll have periods where it moves straight. You'll have times when it comes up like this and bounces right at that line, you know, that was drawn off these highs, bounces, pulls down. But you also get to where they will break and run down the backside of a trend line. It's something to be very aware of, is this right here. It looks great. You know, we have a wick down. It's hitting my 4-hour zone. I'm like, okay, it's going to bounce here. I'm getting fired up, green candle, but I still have a down trade line, right? It breaks that. I'm going, okay, it's broke that trade line, runs down the back side a little bit, green bullish candle, boom. I'm like, I want to take that. I'm long. It's bouncing off my 4-hour zone. It's bouncing off this wick level here, which was support. Support held up here, green candle. I'm in. But this is the problem. It continued short after that. It round down the back side. It's because trend lines are linear. So the only way to get around that is to, for your stop, is to use something that is not linear for your stop placement. There's tools out there. I know this one says Wampler scalping signals, but it is just something I downloaded and modified a little. But something like this, and you would have to modify this because this one uses ATR. So it's nothing I created. It uses ATR. It is something that's in the new Power Trader, so that has been coded into ours. Not the one you guys have yet. I'm still testing it. But it has been coded into the Power Trader to where you can turn it on and off. So it's a good tool. This is what my son's using, and it is a good tool to for stop management. As you notice, it's keeping the stop out there quite a way. You're giving it room to bounce back. Ultimately, we're giving back some, and then we would switch position or switch trades. It's not a tool to trade off of, but if you notice, the way I've got it set up here is typically it is changing colors when we start getting the opposite orders. Buy, 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 buy. Okay, sell in here, and then it just stays orange. So basically it's a stop level tool. So what you're going to do is as the market goes down, you're going to trail your stop. So I like to use the plateaus and go about in the middle. A long plateau like this, between this plateau and this plateau, is super long. I'm not going to go in the middle on that one. You know, I'm going to come down a little bit closer to it like this. And then it comes down and gives you another plateau. Basically, during this sideways movement, you're going to move it down. Now, you can adjust that. That's why I said I didn't know how it was going to look today because I've readjusted things on my chart. And basically, you have to come into here. And if I go 3.5, it's going to change. See how it changed and made it tighter? Let's go to 2.5. So it's going to be based on the instrument. So here's a 2.5. And if you look at where 2.5 is, well, it's tighter. It's closer to the move. I want it tighter to the move. So it's okay to start out, take your entry with this tool, trailing tool, at where I had it set, 4.5. However, when it starts screaming like this, that's when I'd want to adjust the tool. That's why I haven't gone over this before on how to use it as we put it in the indicator, because you would change it. I set it up at 4.5 on gold. As it moves and you get in, as it moves and starts screaming. I don't leave this on the chart all the time. Most of my charts are like this. If I'm in a move and it starts screaming, if I'm not using the if I'm not using our power trade marks, which is the Fibonacci tool changed over to that. If I'm not using our target tool, you know, from the stop to the entry to mark our targets, if I'm not using that, then I'll turn on the other tool. So sometimes you'll see. I don't do it often. But again, it was set on 4.5, and that's good for gentle swings. 4.5 is good for gentle swings. When it starts screaming, I want to change it and make it tighter because I'm going to trail my stop. Again, on the wide levels, so your stop's up here, and then it's still screaming down. You could trail down the back side of that if you want, and just even put your stop in there and just travel down that as it has the line, you know, like, because your line would be right here, and then you could move your stop down. So I like using the plateaus though. Plateau, and then we get another plateau. So I'm either bringing it right there or kind of going between. I don't like putting it right at the plateau. Goes down, plateau. Here we have the last plateau. So it's going down. We're moving our stop off each of these plateaus, okay? And then here we have another plateau, so we move our stop down, and then we get stopped out here. It's the same place we got stopped out by trailing our stop on the candles. Remember, I showed the 3-minute time frame. We were moving the stop on the candles. So there's nothing different on that. We're still closing out at the same location. It's just that it's a different trade management, a different tool to help you move your stop. I'm trying to find something real quick. I'm going to just pop this link in, guys. This should go to the playlist. I'm going to pop, instead of individual YouTube videos, I'm popping that link in the chat. I'll pin it to the top. That link there should take you out to the training. I got a few videos out there, not all our training videos, but there's a video on the power trader signals indicator, which is what you see on the chart. But I also have one on, and it's just called the Ultimate Trading View Profit Target Tool. I don't know. I just couldn't come up with a name. So TradingView has our position tool, you know, for sell and buy, and they have like one target. And you can set it to like 2 to 1 or 1 to 1. So on our tool though, and it's the Ultimate Trade. So that should take you to a playlist if someone wants to let me know. And if you're trading with huge targets, and you think you're, you know, the trader that wants to make multi-million dollars a month, I tell people to stop thinking that. It's okay to want it, but that shouldn't be your drive. Your drive should not be, I want to buy a Lamborghini. That should not be your drive at all. Your drive should not be, you know, I want Lambo money. I've seen someone on TikTok make $60,000 in 5 minutes. There's tricks and stuff they're doing to do that. And trading. Some of them are legit. I'm not gonna, they're not all, but there's so much crap on the internet now. I feel sorry for everybody trying to learn. Back when I learned, there wasn't this much stuff on there. So it's okay to want that, but it's not okay to make that your drive. It's okay to have a vision board and, you know, want that for the future, but your drive should be, let's learn the process of trading. Let's trade consistently for months and a year on end. That should be your drive. Okay. The rest will, what I do, I just lost my chart here. Let me pull that back up. I don't know why. There we go. So your drive should be, let's build consistency. Let's learn to trade. Let's do things the right way. And then go from there, because after that, it just gets better and better and better. So there's a link I just put in there. I think I put it in there twice. So the video I just put in there is that one where it's $0 to $90,000 in a year. The only reason it's 0 to 90,000 instead of 100,000, because that's the way it works. The math works. It's basically take your first 3 months, like you could start now. You don't have to wait till next year. But take your first 3 months and let's do a daily goal of say like 200 a day. That's it. You're on this move down on gold, you were shooting for $200 for the day. Now, if you put on 10 contracts and you closed out 8, guess what? If you put on 10, closed out 8 on the move down, you got your 200 for the day, let's say. And you had 2 runners, so you captured more. You got stopped out in here somewhere. So you captured more than your daily goal. That's your bonus check at the end of the month. That goes into your bonus pool. So let's say you locked in your 200 for the day. And let's say you locked in an extra 150. Or let's just say 100 on your runners. That 100 goes into your bonus pool. So you can pull from your bonus pool. So Monday, let's say I don't want to trade. Well, that's okay. I got $100 in my bonus pool to cover me not trading and making $200 on the day Monday. I'm still down 100 from my target. But the bonus will help you do that. Or you need to take a day off or a week off. That comes out of your bonus pool. So watch that video because that's a good one if you haven't already created your goals. All right. So that's all I wanted to cover on gold. I know it's a lot. Again, there's multiple tools out there you can use for stop management. This is one I like to use. It's basically an ATR stop tool. I can't even remember the original name on it. I probably have it in here in my favorites. Oh, here it is. I don't know anything about the guy, but it's this one right here. ATR trailing stop. And there's the guy's name. Ceyhun. So that's the original one that I had. And then I've tweaked it and modified it some on my own. So you could download that right now and then put it on the chart and use it for a stop tool. That's the only reason. I don't like picking entries because here's the thing. Right now, I adjusted it for the move down and changed the setting. So you could look at that and say, well, would you have not bought here? And yeah, you could have. We're looking for that structure. You have most of the structure. You have a low, a high, a higher low, and it pulled up and gave you that. So you could have bought in here as well off that. So it is a helpful tool to confirm what you're seeing in the market, confirm the structure. Which link? Oh, the studio link. Oh, that's not what I wanted. So the studio link won't work for you guys. Hang on a second. Let me see if I can get it. I was hoping that was my playlist link. I see. Yeah, I see it. Okay. Let me see if I can find a, it may not. Oh, it should work here. Let me see. Let me see if I can find this. It keeps wanting to start the one. I think this, someone let me know if this goes out there. This is, see if that goes. That should go to the playlist because I'm logged in under Studio. But see if that takes you out. It'll show one video, but if you scroll down, it should show the other videos. There's just like 5 in there. And the one that I think a lot of people will like is the Become Numb to Trading. So let me know if that one works. Hopefully that'll take you out. And it'll have a video like that it wants to start. And then if you scroll down, you should be able to see the other videos in the playlist. Should show in there. So let me know if it does. But you should see that. All right, so I got to scoot. It's 12, so lunchtime, right? So just manage your trades safe. Think about the time of day. Always think about the time of day. And just, you don't have to think in depth. So I've already done that for you. Millions of traders around the world have done that for you. Hedge fund managers have done that for you. So you don't have to think about what time of day should I trade. The market has done that for you. It's the busiest time. The U.S. session is the busiest session because you have an overlap. You have an overlap of the London session and you have the U.S. session. So there's an overlap from 8 o'clock to 4 or 8 o'clock to noon, sorry. And so that overlap, and we're talking noon Eastern, is the busiest time because we have traders overseas as well. And we're talking about the big bank traders and hedge funds and all that. So everybody's done that for you. That is the best time to trade. Now, can you go in and trade the Asian session? Yes, you can. Okay. Gold, sometimes. It's better to trade like the Australian dollar or the Japanese yen. If there's news on the Australian dollar at night, guess what I'm trading? I am not trading gold. I'm not trading platinum. I'm not trading Bitcoin. I'm not trading ES and Nasdaq. Now, I have traded both those in the evening a couple times, but it was based off of structure, and that was solely it. So I want to trade the Australian dollar when there's Australian news. So at night, Asian session, and it's okay to trade then, but guess what? The Asian session does not have high volume like we do during the US session. So what should I do? I should trade with less contracts. I'm going to have less confidence in my trade because there's no volume stepping in. And if I get into a trade and I want to be in profit position in 15 minutes to half an hour, and I'm not able to close partials because it's just bouncing up and down, well, guess what? It's okay to close out at a small loss. I'd rather take a small loss than letting it go to my stop and just saying, oh, well, I placed that trade. I'll wake up in the morning. Nothing happened. I got in on the Asian session on gold, and at 9:30, I placed the trade. Hasn't moved. Haven't closed partial. I was willing to take a $500 risk. I'm tired. I want to go to bed. Didn't get what I was wanting for. I would rather close that out and then just wait in the morning. Take a small loss. I'd rather lose 200, 300 than 500. That's still account management, okay? And you need that as well. All this ties together. So hope you enjoyed today. I did go a little different route instead of trading live, and that's because, of course, I couldn't be here first thing in the morning. As you can see, I'm still up 2250 on the Canadian trade. Those are the two runners. So again, as you're looking at gold real quick before we go, back and forth, we're getting the sells, we're getting the buys. It's just there's no volume, guys. There's nothing to drive this. And so if there's nothing to drive it, don't expect it. If it's the time of day where there's nothing driving the market, don't expect it to move. It's going to meander one way or another. You can guarantee it. And if you're taking these buys and sells, or you're looking at structure to be broke, yeah, you know, this move down here broke that low. And then it came up and formed this plateau area. Lower high, come back, lower low. Okay? Are you waiting on pullback? Take it short. Wait on pullback, take it short. Fine. It doesn't go lower low this time. It's lunchtime. Half of the volume is gone for the day. So be careful in trading. Take all that into consideration. If you haven't watched those videos on how to build your account, because basically all you're doing or should be doing is looking how to trade, locking in X amount per day. Let's get that under grips first. Let's get a grasp on locking in 200 per day. That's $4,000 a month. A lot of people can live on that. Okay, or maybe that's half your income if you're married. And that depends on your wife's spending limit. No, I'm just kidding, guys. So she's not down here, so she can't hear me. So, but just do that first for 3 months. Let's get that under grips. 200 a day, 3 months. You're going to have some losing days. It's okay. So 200 a day, you're looking for 4,000 a month. If you fail and only make 2,000 a month, is that not positive? If you fail and make 1,500, if you fail and make $3,000. So you fail to make 200 a day. But because of your runners should cover your losses. Okay, so your runner profit, that extra, that bonus, that check that you get at the end of the month, they should cover your losses. So let's get that under grips for 3 months and then bump it up. Shoot for 2 trades a day. Then after that, you just bump your contract size. So you get consistent the second 3 months. And just do the 2 trades a day. 200 per trade, 2 trades a day. Or it could be 100 for you. You have to decide. It could be, well, I'm looking for 100 a day. 20 trading days, I'll trade every day, 2,000 a month. The next month, you're going to look for 2 trades, 200, 4,000 a month. Or the next 3. Do it in sets of 3. 3 months, 3 months, 3 months. Because you do 200 a day, that's 4,000 a month. Next month, you're going to do 200 a day, or 200 a trade times 2 trades. Now you're 400 a month. That's $8K a month for the next set of 3 months. The third set of 3 months, you're just doubling contract size. Okay? And if you were making 8K before, now you're making 16K a month by just doubling contract size. But you are literally doing the exact same thing every single day. That doesn't change. You're managing your trades, you're managing your account the way you do every single day. That's building your trade business. It should be a business. You have to not just manage getting in and getting out. Getting in and getting out, people can do that all day long. I can get in as many trades. I can go trade 16 instruments and get in them. That doesn't mean they're going to move for me. That doesn't mean they're good trades. That's not good trading, to go throw on trades left and right. We need the good solid entries. Do we have to? Oh, there's news come out. So anyways, that's the way you should trade. Watch that one because it's a good one. Sorry the numbers don't work out to 0 to 100K in a day or a year, but that's because that's just the way the numbers work out. So for you, you have to decide. You could change those numbers, but I recommend shooting for a 3-month term and just saying, okay, I'm going to shoot for 100 a day for 3 months, or 200 a day for 3 months. It could be for you 400 for 3 months right off the start. It just that depends on your account size and how many contracts you're putting on. So hope you enjoyed. Rewatch the video. It is out there. I'll post a link to it. Actually, there should be a link to it already in the Discord. So I'll post a link to it. And if you got any questions, just ask me in the Discord. I will talk to you later. Safe trading, everybody. Look for next week. We'll be back on Monday. And then I will do some night sessions for like the Australian dollar and stuff here pretty soon.